Apologies, I hope you can hear me now. My network turned out. Please, if you can hear me, just give me a thumbs up as we continue. Thank you so much. So, like I was explaining, we are looking at this consideration of financial statements. So, now we begin by looking at the two major steps that you must follow. Two major steps, please. If you need to write it down, write it down. Number one step is what I call open the skeleton. Open the skeleton. That is number one step. Number two step is do the next 7 workings. Number one step is what? Open the skeleton. I will show you how to open skeleton. Number two steps is do the next 7 workings under statement of financial position consolidation. Please let these two things sink into your head. Number one, I say open what? The skeleton. Number two, do what? Do what? Who is there? Are we still together? Okay. Oh yeah, what did you say? I can't hear you. Huh? Allow me look like I barely can hear you. Okay. Okay. Thank you. So, like I said, you open the skeleton. How do you open the skeleton? Afadu, please just mute yourself. Let's continue. How do you open the skeleton? This is how to do it. That is to say, once you are given a question, the first thing first that you will do is to write out the headings, the currency, and the rounding off denomination. In other words, once they say, you go to requirement, they say, prepare S and E statement of financial position, consideration of statement of financial position. Go there. First thing first that you will do is to write out S and E statement of financial position as at 31st December 2024. You go down a bit. You write the currency. Very, very important. If you like do all the whole workings in the world, write all the headings and write everything, but you fail to put the currency, the denomination, you fail to put the currency there, anything you do there is the zero that you will score. But once you put the headings and you write down the currency and the rounding of denomination, that is, if it's in million, right, as they give it to you, give back to them. If it's in millions, give them back in millions. If it is in thousand, give them back in thousand. If it is in billion, give them back in billion. You see this heading that you have written down can fetch you 1 mark. 1 mark. And if you have 1 mark, you're only looking for 49 to pass. That's where to always begin from. You understand me now? So that is the first steps under opening of the skeleton, under consolidation of statement of financial position. Remember, I said there are 2 steps you must follow. Number 1 step is that you must open the skeleton. Number 2nd step is that you must do the next 7 workings. We are still on number 1. So number 1, open the skeleton. How do you do it? You have just 2 things to do. The first one is write out the headings, the currency, and the narrative of denomination. And number 2 is that Combine all the items in assets and liability in both entities, statement of financial position, but do not combine any item under the equity portion. This is what I'm trying to tell you here. After you have written down the name of the company, you have written down the currency and the rounding off figure, that's the heading. Go straight into the asset portion of both the parent and the subsidiary and begin to add them. If, for instance, you have PPE under parent, you have PPE under subsidiary, carry the number that is between that is there, and don't just open bracket, just write PPE, open bracket. If you have 50 under the PPE of parent, write 50 down. Plus, if you have 10 under that of the subsidiary, just write plus 10. Don't close the bracket, just open the bracket down. You go to the next item that is under the asset there. If it is what is it called now? Investment property, you write it down. Investment property, and the one in parent, you write it. You investment property, you open bracket. If it's 10 that is in parent, you write 10. Plus, if it's 5 that is in subsidiary, you write 5. You open the bracket, don't close it. You go to the next asset, you do the same thing until you finish the whole asset from non-current to the current assets. Is that taken? That is how to open the skeleton. When you are done with the asset, you go to the liability. Jump equity. Don't do anything on equity. Go to, but leave space for equity. You can write equity and liability. The under equity. Now, let me even say this before we go to liability. Under equity, write ordinary share capital. But the ordinary share capital that you are going to write is that of the parent only. Take note. Is that of what? The parent only that you will write there. Don't write anything that relates to the subsidiary. Why? Because there will be adjustment on that of the subsidiary. Is that taken? So let me go back again. Step 1. Bullet 1. Write out the heading. Step 1. Open the skeleton. Under opening of the skeleton, you have to open the skeleton. Write out the heading, the currency, and then the denomination. There. Bullet 2. Combine all the items of all the like items. Combine them. Asset to asset, liability to liability. But open the bracket, don't close it. Then, under equity, you are only to carry that of the shareholder, ordinary shareholder of the parent, ordinary shareholder, and then if you have share premium there, you carry the share premium, ordinary share, and the share premium of only the parent. Don't touch that of the subsidiary. Why? Because there will be adjustment on that of the subsidiary. Is that taken? Are we still together? Can you hear me? Are we still together? You are not talking. Okay, thank you so much. So let's go on. Let's look at this example so that you will have a better understanding. Let's look at this example. Look at this example. Let's look at it together. Akpaba acquire Natashank on 1st January 2024. The state of financial position of A and N as at 31st December 2024 were as follows. Non-current assets, property, basic investment in S, current assets, equity, share capital, share premium, retain any, current liability, and then you have it like that and like that. Then require, prepare a consolidated statement of financial position. And for those who want to snap, let me quickly take it back. It's an example. You can snap and start with it. It's a practice that you are practicing. Please, that is it. You can snap it. Okay. Thank you. So now, like I said the first thing first is what? you open the skeleton once you see a question like this. How do you open the skeleton? Look at it. Akpaba Group, statement of financial position for the period ending on the 1st December 2024. I wrote N00 N000. That is the rounding off denomination. This heading alone can give me 1 mark. And then I proceed. I write my asset. PPE 640 plus 125k. I close the bracket because there are no adjustments in this question. I have combined them. 640 plus 125, 765. Current asset 140k plus 20k, 160. Now, let's go back. Let me take you through something here. Look at it. They said under non-current asset, we have basic investment in subsidiary, 120. Under the procedure, when I was mentioning, I say eliminate in full any investment status. Do you remember? Do you remember I said so? Are we still together? Thank you. Eliminate anything that has to do with investment. Eliminate that status. So now we have removed it. That's how to eliminate that. Is to say ignore it. Ignore it. You only make use of it when you are doing your adjustments, when you are to determine the fair value of the net asset of the subsidiary. That is when you make use of it. Or when you are determining goodwill. As you proceed, you will be seeing some of these things. Is that taken? So let's go to the solution of this question. So now we have it there. So that is it. Total asset. Sorry, please. Total asset is 925. And I told you, once you come to the equity and the liability, the equity you have to carry is that of the parent. The share premium you have to carry is that of the parent. Now, if there are no adjustments to retain any, you carry retain any also of the parent and that of the subsidiary. And that's why I always say that the first one that you will carry is the equity share capital, ordinary share capital of the parent alone, share premium of the parent alone. But you see, this retain earning will always have adjustment. That's why I say it's just because this question it does not give us any adjustment. As we proceed, you will see the adjustment. But if you are opening the skeleton first, you can skip this retain earning. Once you notice that there is an adjustment on retain earning. Is that taken? Is that taken, please? I'm sure it is taken. So that is that for that. Now, under the liability, 100,000 plus 25,000 was 125. Total equity and liability 925. Meaning total assets balance with total equity and liability. Therefore, our balance sheet is balanced. So let me recap again. This thing is very, very simple. But if you don't know the process to follow, that's where the problems are. Once they give you any question on consolidation, and you have to start with consolidation of external financial position, the first thing that must come to your mind is that I told you to go and open the skeleton. Go and open what? The skeleton is very, very important. Number two, how do you open the skeleton? I said write down the headings. The headings may be Tolulope Group, Nigeria Limited, statement of financial position as at 31st December 2024. You write the denomination down, N million, N million. That's that. Then you start to combine the like items, asset to asset, asset to asset, liability to liability. Only the equity of parents. It is as simple as that. You must not fail. That's why I'm taking my time to explain it to you now. Thank you. So let's proceed to, that is step 1. Now we go to step 2. I said do the following. Who can tell me the step 2? Are we still together? Who can tell me the step 2? Do the next 7 workings. Thank you. So tonight, we are only going to look at the first 3 workings. Then we look at the next class, we look at the next 4 workings. I told you I don't want to rush you. My joy is for you to get it. Not because you want to write exam, but also to use it in in your working place, or when you meet such challenges in the future. So quickly, let's go to the workings that you are to do. I said you are going to do the next 7 workings. Workings 1. Now, workings 1 is you determine a number of years that you are to consider for consolidation. How many years between acquisition and the date you are consolidating? In other words, how many years is between the date that the parent acquired the subsidiary and the date you are turning their financials into a single financial statement? It is very, very important, because the reason is this: I have seen over time that if you cannot calculate those numbers of years, that is the beginning of your failure, because you will need it when you are doing certain adjustments. So the step workings 1 is to determine the number of years to consider for consolidation. How do you do this? Number 1 is you write out the date of acquisition on top. Your workings 1, determination of consolidation years. You go down, you write out date of acquisition. Me, I used to write DOA. It is allowed, but you are not allowed to abbreviate in your exam. So date of acquisition, put it there, 1. Then under, you write date of consolidation. And date of acquisition, you will only write the date and the year. If it's 1st January 2002, write it there, 1st January 2002. That's the date of acquisition. Then you go down, you now write date of consolidation, 31st December 2004. Who can give me the number of years now? Somebody should do that calculation for me. Date of acquisition, 1st January 2022. Date of consolidation, 31st December 2024. Just raise your hand, I will call you. Oh yeah, we don't have time. Let's go. Oh yeah, Tolulope, how many years? (2022 to 2024), she said it's 3 years. Is she correct? Let's count together. 1st January 2022 to December 2022 is how many years? 1. 1st January 2023 to December 2023, that's 2. 1st January 2024 December 2024, that's 3 years. You are permitted and allowed to use your finger to count. Use your fingers to count. Don't be ashamed. Do it. So that you will not be confused. You just do 1st January to December 1. 1st January to December 2. 1st January to December 3. Is that taken? Thank you. That is that for that. So let's go to the second workings. The second workings that you must do is you must be able to determine the group structure. That is number 2. The second workings is determine the group structure. That is, determine the control structure in a pictorial form. You must be able to tell us in pictorial form what is the structure of the group. That is, what is the control that the parent have over the subsidiary or the subsidiaries, as it were. Example 1. Akpaba Limited acquired 80% of Natasha Limited on 1st January 2021 when its net assets were 200 M. Today, 31st December 2024, determine the group structure. How do you do that? You just write the name of the parent first. That's what you are seeing now on your screen. Akpaba Limited, that's 1. Then Natasha, you draw that arrow down to signify control. You draw the arrow down. and you write it 80%, and then in bracket under Natasha, you see where I put it, NCI, mean non-controlling interest, and then you write it there 20%. Non-controlling interest, that is to say the percentage that the parent do not have control over. That is how to determine the group structure. Let's look at this another example again. Akpaba Limited acquired 80% of Natasha Limited on 1st January 2021 when its net was 200 Akpaba also acquired 60% in Tinuba Limited of January 2024. Today is 31st December 2024. Determine the group structure. Determine the group structure. You can see it here. We're told that Akpaba first acquired in 2021 Natasha. And that's why you have that arrow drawn down, 80% to Natasha. And then another arrow from Akpaba to Tinuba, 60%. And then inside that we write NCI, 40%. In other words, these are two subsidiaries under Akpaba. Two subsidiaries under Akpaba, but we're able to establish their controls as it were. Please, this is very, very important. If you don't understand it, take me back. I will ask questions on it. So that is that for that. Any question on that, or I should go ahead, please? Are we still together? Okay, Ayola, please go ahead. You can't see my screen now. Timindayo, can you see my screen? Ah, maybe you log out and log in again, please. Okay, thank you. And that's that. So this is how to determine the group structure. You must determine the group structure. The first two are peripheral. Now let's go to the main one. Working steering. Determine the fair value of the net asset of the subsidiary, both at the date of acquisition and consolidation. That is to say, what is the fair value of the net asset of the subsidiary? And how do you determine this? You determine them both on the date of acquisition and the date of consolidation. The date of acquisition is the date that then the parent acquire or buy the subsidiary. The date of consolidation is the date that you are preparing their account as if they were a single entity. But you must be able to determine the fair value of the net asset of the subsidiary, both at the date that the parent buy the subsidiary and the day that you are now preparing the account. And the essence is to note what profit have been made. What profit have been made. Is that taken? That is the core essence. That is what the core essence. To determine the profit that have been made. And so that is that for that. And how do you do this also? It's very, very simple. All that you need to do is follow this formula that I have put down here. Fair value of net assets. Once you write fair value of net asset of subsidiary, you write in front of that at acquisition, at consolidation. These are your headings that you must always put down. Very, very important. Fair value of net asset of a subsidiary at acquisition, at consolidation. So let's look at this example also to buttress what we are looking at. Example 1. Akpaba Limited acquires 80% of National Leon on 1st January when its net asset and retained earnings were 200M and 300M respectively. The general financial position of A and N as of 31st December 2024 was as follows. Look at it. You can see it. Required. We are to prepare a consolidation of financial position. Now, if we are to do this, I told us first thing that we must do is to, open the skeleton. Is that taking? And how do we do that? We have Akpaba Limited statement of financial position. As at 31st December 2024. You go, you write, and same thing. And I'm just demonstrating what we have been able to look at in the class. And that's that for that. And I said, once you're able to do this, what do you do again? Who can tell me what next? What next? What is the next thing for us to do? Are we together? What is the next thing for us to do? Oh, yeah, now. Temidayo, Farouk. Can you all hear me? Are we still together? Oh, yeah, to look, give me what is the next thing for us to do? We are solving this question now. You said? Hello. I said now there are 2 steps for us to take. Tell me, we have been able to. Okay, tell me the 2 steps. Yes, before you open the skeleton before you now put all the flesh. Open skeleton before you put flesh. Then step 2. Okay, thank you so much. All right, who again is here? Who want to help? What are the 2 steps? Just tell me the 2 steps. Okay, Olamilokun, go ahead. Okay. Thank you. So first steps is open the skeleton. Then the second one is do the next 7 walking. So under the first steps, what are you to do? Who can help me? Tolulope, go ahead. And that's number 1. The second one now, Tolulope, go ahead. Okay, thank you. So this is what we are going to do. Go ahead. Okay. So this is what I want you to do for me tonight now. This very okay. That's when you get to this step 2. Please don't miss it up. Please don't miss it. Okay, wait, hold on. Let me recap. Group account is very simple, but it require you following what I'm telling you. This is what I have been using over the years, and none of my students have ever failed it. And I'm giving you now. Please, just follow me. Once they say prepare statement of financial, consider statement of financial position. Just what should come to your head is that 2 steps is what I must follow. Or I should even call it so that you will not be confusing you. I should just call it 9 steps so that it will not be confusing you. Is it better that way? Hmm? But what you should know is that there are 2 steps. Number 1 is open the skeleton. Even if you don't know anything in that group account, just open that skeleton. How do you do open the skeleton? Write the headings, the rounding off figure, the headings, the rounding off figure, the denomination, write it there. Then combine assets of both the parent and the subsidiary. combine the liability, then only the equity of the, what is it called, the parent, that's what you will write there. If that is the only thing you know, I'm telling you for a fact, if you're able to put that thing down like that, and they write prepare statement of financial position, consider statement of financial position, and they put 10 marks there. If you're able to do this thing that I've just said, I can assure you that you are going to have 3 marks minimum. Minimum of 3 marks. That's what you will have. So I know what I'm saying. Do you understand now? And I said that is the first step. Then the second step, that's where the other marks are. And that second step is that I said you should do the next 7 workings. And we have been able to look at the first working. I said you must determine the years that is involved for consolidation. How do you do it? You do it by, number 1, determining the date of acquisition, comparing it with the date of consolidation, and then you write out the number of years for consolidation. Number 2, I said determine the group structure. That is to say the control structure. Determine it. And then number 3, I said determine the fair value of the net assets of the subsidiary, both at date of acquisition and date of consolidation. And I think that is where we are. But it's like you are not getting it. So what I will do tonight is this. Please, I want you to snap this very particular question now. Take your time, snap it. I've told you I am not going to rush this class. Please, snap this one. Have you snapped it? You only have 1 second to snap. I'm sure you have done that. Okay, snap this one too. Okay, thank you. You have snapped it, I guess. You have snapped it, right? Okay. This is what I want you to do. We are not going to rush this class. I have time for you. In fact, if it's possible by next week, hopefully they will grant my leave for next week. Even if it's afternoon, we are going to meet so that we divorce some of these things. You understand me now? So now what I want to do tonight is all that we have learned so far. I want to go and do it as an assignment. Then you forward it to me on the WhatsApp platform so that we can end the class here tonight. I want you to learn this thing. I don't want to rush it at all. Because if you get it, I'll be very happy. Is that okay? Thank you. So please do these workings, send it to me, and then we'll know what to do from there. Go ahead, Olamilokun. Yes. It's a must. Oh. Yes, you must combine their assets. Then other adjustments now will now be. That's why I say you open the bracket down. Now, when there are other adjustments, you now bring them in if it's to minus or to add. Do you understand me now? You open the bracket down, you won't close it. So if there are adjustments, that's when you'll now be minusing or deducting. Is that taken? All right. Any other question, please? Okay, so this is where we are going to call it a day today. Please, I want you to do that assignment. Hopefully, if I will speak with the other guys, and okay, Ayola, go ahead. Yes, I said you will eliminate investment. And the investment must not have, when you are consolidating, Investment in whether subsidiary in any way must not appear. As long as there is an investment in that subsidiary, it must not appear in any of your financial statement. You eliminate it, you ignore it. But where you will use it is when you are determining the goodwill, which we are going to still consider. Thank you. Any other question?